Devin, welcome to your trades the week ahead, and what a week it has been. Closed in with levels of 6,200, intraday coming in on Friday, and a good 1.5% surge. And it really wouldn't have been possible had it not been for the contribution from real estate, banks, as well as Capco's. What a remarkable rally there.
Oh yeah, yes indeed. And the turns that they have taken, something has replaced the other to make sure that the interest in the index stays volatile, but an eventful week, yes.
Oh yes, it has been. So 6,200 is what we had a touch and go moment with in Friday's session. Closed in just a shade below that at 61.87. Both the futures as well as the spot Nifty did cross above that 6,200 mark. The banking pack, and that really was the star performer. A good 4.2% surge coming in for the Bank Nifty, just shy of its all-time high of 13,320 on the futures. Nifty Junior, 2.2% rally. Real estate, cap goods, power, autos, all of them actually held out. Stand corrected. Autos saw a dip of about 0.8%, as was the case with IT, FMCG, as well as consumer durables. To the gainers from the Nifty then, and they included the likes of JP Associates, Kotak Bank, IDFC, Cipla, DLF, BOB, Ranbaxy, as well as SPI, which really gave the leg up to the market. On the way down, HCL Technologies, ITC, as well as NMDC. The mid-cap index as well held out pretty smartly, but can't say the same about the small-cap space. But then again, Neeraj, you had stars like JM Financials, which saw an uptick of 40%.
Yeah, I mean, splendid for certain names which came out with good numbers or good results as well. Well, and more importantly, I think the week ahead would essentially be about stocks which haven't participated. So it could well be mid-caps and small-caps which come to the fore. It could well be cap goods which have started the move on Friday and could carry on to the next week as well. So the likes of a Crompton, or for that matter a BGR, you name it, Siemens, all of these stocks could actually make next week their own, as would some of the other mid-caps and small-caps which would welcome to the party if the index stays a bit soft. So the question really is what to do next week. And let's get in two experts on that. Devin Choksi to speak about the fundamentals and Dr. C.K. Narayan to talk about the technicals. So much to talk about. Gentlemen, thanks so much for joining in. We'll play a bit of a rapid fire here, but Dr. Narayan, to you first. And purely the way the Bank Nifty and the Nifty and some of the other indices have done on the charts, do you believe that up move could continue into next week?
I think as of the moment, the upside momentum is very much intact, and we saw it actually go into the close of the week, as it were, and that should see a positive spillover when the market starts trading in the next week as well. So I think Bank Nifty has still got the mojo. You have stocks which are breaking out into fresh all-time new highs. I think capital goods have joined in the fray, as you mentioned earlier. Autos chipping in, gas, oil and gas stocks are chipping in. I think virtually everything is on the run. So we should be able to see Nifty going towards 6260 and maybe the Bank Nifty making it towards about maybe 13,500, 13,600 as well.
Devin, what is your sense? You think next week we may see newer sectors which have started their move just on Friday, like cap goods, actually take the fall?
Well, if I look into the data and if I study the kind of activity which is happening into the market, plus I think the order flows which are flowing into the dealing desk, what I find is that largely the amount of allocation of funds towards India in emerging market has basically, I think, driven some of the counters. It is coupled with fresh allocation, at the same time short covering of the existing positions, I think, which has primarily driven this market. So as long as the funds are getting into the system or coming into the system, probably I think the allocations would keep on demanding more and more amount of buying side kind of an order, and that could maintain the rally as I see it. Though the force may come down somewhere closer to 6300, 6350 levels, the probability of I think some amount of profit booking stroke offloading kind of a portfolio may take place on the profit side. But as I see it, I think the amount of money which is getting allotted into the markets, more amount of money is getting allotted to the trading funds and not investing funds. So as a result of which, larger amount of trading funds are active into the market, and the likes of hedge funds have already started playing big time. So to my mind, I think if they get into some profit booking mode, then it may check the rally at somewhere around 6300, 6350 levels, and probably have a correction of around, modest correction of around 200 to 250 points from there on. So we'll have to wait and see how it pans out. But I think belief is that we are still in the range bound market. We still probably struggle around to cross it out on 6300 plus levels. the headwinds like currency is something which is I think more tricky at this point of time. So would remain watchful at the same time when the index is scoring new highs.
Yeah, but no watching banks or all watching banks because they've done very well. I think the bond price performance has also helped because the sentiment on some of the PSU banks has changed as a result of the fall in the yield or the converse as it would be, the rise in the bond prices. 7.33 for the 10-year bond yield, the lowest level since November 2009. And that helps sentiment on the PSU banks. Though, must say that the private banks have done equally well. So that's the news, really, the 10-year bond yields, and which have touched the new lows as well or for a considerable period of time. But the kind of impact that it has had on the banks is something which is amazing. Dr. Narayan, you mentioned at the start that the banks probably still have got some steam left. What do you do here? Do you trade a private bank or do you trade private banks or public banks? Which one would you choose?
See, this change in the bond yields is largely going to have a positive rub-off on all the public sector banks. So I think which is why you have seen them all go up in a row. But I think the stocks which are actually breaking out into fresh new highs, which would include the likes of Yes Bank, IndusInd Bank, and in particular Kotak Bank, which has been a bit slow but then very, very steady in its progress. I think I would try and chance my arm with these because all the public sector banks are these, let's say, 2-digit or low 3-digit kind of stocks where too many small traders actually get in, and that fairly impedes their progress. So I would stick with Kotak Bank or Indus or Yes Bank for the coming week.
Some of the other large cap newsmakers one of them was Ranbaxy. It pleaded guilty to felony charges of adulterated drugs, but it kind of removed an overhang from the stock really because now the market had a clear direction of where Ranbaxy is going. This was provided for earlier. In fact, the stock went up, as did most of the other pharma names this week. And that was the talking point, Dr. Narayan. While on Friday's session, maybe some of these stocks took a breather, but Ranbaxy, Dr. Reddy's, Lupin, Glenmark, everything went up. What amongst these do you like as a stock to trade in next week?
See, these are stocks which have been patronized by the market for a long time, and stocks like Lupin may sort of suffer some sort of temporary setback on some profit taking by some holder, but then they continue to maintain their trend. Similar is the case with Dr. Reddy. I think that is also something trading at all-time highs. I'm always happy to buy stocks which are patronized by large size buyers like institutions. And, you should be buying only those stocks which are keeping on breaking out into new highs, particularly when the index is trading very close to its all-time high. So I would rather avoid the ones with the news which is a bit adverse, like maybe Ranbaxy, where the trends are not really very strong. So, and I would stick with the Lupins and I would stick with the Cadillacs and, stocks which are all trading at their highs. I think they'll become even more expensive and they will probably surge a little more than what they have already done so.
Dr. Narayan, 2 or 3 of these stocks, any one that you really like? A JM Financial, a Sun Pharma Advanced Research, or an Apollo Hospitals?
I think the hands-down winner among the 3 would be Sun Pharma Advanced because it's something which has been building up for quite a while, right? And then we had this very strong upside movement on the back of some positive news. So I think the market has reacted very strongly and very positively to some favorable developments. And the all-time high of the stock is very much close by for it to be exceeded. It's about 180, 185 levels, and the stock saw a high, I believe, around 170 odd levels during the week. I think it's a shoo-in for moving into new highs. I would most certainly stick with Sun Pharma Advanced. JM is a momentum thing based on the news, but okay, Mr. Pandit has come in and all that. That's not going to immediately alter things that it will double from here and all that. It's a small price stock. But we have to remember that it has moved from about 15, 17 levels to about 26, 28 levels. So fairly decent set of gains there. Apollo Hospital, not very liquid, not very well patronized by people in the market. Large institutional stock, every time, it moves down, there is somebody willing to buy it, not too many people willing to let go. So I think it'll be one of those which will just keep on improving over a period of time. So Sun Pharma Advanced it is.
Let's tell you what trade to execute come Monday morning. CK, start off with your picks. What would you recommend?
I'm finding some very steady improvements in the stock charts of Aban Offshore. I think the news flow has also been consistent. The volumes have been picking up, so clearly some fresh buying is emerging in Aban Offshore. Currently at about 325, 326, I think there is very little upside, upside resistance until it rolls up to somewhere around 360, 370. So I think that's a fair amount of upside ground to cover, and with the market the way it is, such stocks which have been earlier well patronized in the market will find it easier to move up. So Aban Offshore is a very clear buy. Maybe a 10 rupee stop loss and looking for a target at about 360 by end of the week. Second one to buy, Tata Global. I think FMCG is in the news, and Tata Global has had a small pullback and is now again up and running. 147, 148 is where it's trading at. Keep 6 to 7 rupees as a stop, and I would think 160 is very much possible in the coming week.
Okay, Devin, just about 30 seconds left, but you, I believe, have a buy on EID Parry and Adani Ports post the numbers.
Yes, Nikunj, I think very quickly I can say that I think both these stocks are possibly showing good amount of growth promise in this financial year 13-14. Sugar year 14 is likely to be, I think, having some amount of lower production of sugar, and that could possibly help, I think, the likes of EID Parry to probably register better performance on the pricing and the realization front. And in case of Adani Port, of course, I think the growth going forward is going to be handsome. Expecting, I think, more than 105 million metric tons of cargo handling in the current financial year, and with the Abbott port out of the way, probably, I think the bugs are looking much better. So I would think that I think both these stocks hold potential to give 25 to 30% kind of an upside going forward in this financial year.